All right. All notifications are off and we are running and live. Nader, I'm excited to dive in with you, man.
Mike, thanks for having me, man. It's going to be great.
Yeah. Why don't we jump in and talk about DeSo? Let's just get right to it. So you are the creator of the DeSo blockchain. What is DeSo doing in the world that's unique? What is it attempting to do? Where do you sort of see the North Star?
Absolutely. So DeSo is short for decentralized social. And it's called that because it's the first blockchain that can really scale the social kind of category of applications. So if you look at blockchains like Bitcoin or Ethereum, or even the more advanced ones out there today, all of them are really oriented around scaling financial transactions, or decentralized finance, or short for DeFi for short, usually. But if you look at what's required to actually scale something like a social application, where each person has a profile and they make posts and they follow people, it generates a lot more data that has to be stored and indexed in ways that financial transactions don't. So for example, if I send you money and you send me back money, and we could do that all day long and not really generate very much data. But if we're generating a post, or if I'm following you, or even if I like something, right? Those are all pieces of data that have to be stored and indexed. And so when I started this project about 2 years ago, we kind of saw this gap of all the blockchains that were raising money, all the blockchains that were being developed, really weren't going to serve something as advanced as a social application because they can't store and index things in the way that's needed for that. And so started working on that about 2 years ago, early 2019, got really excited about a blockchain that actually could take us to that new category and disrupt social, which, as we all know, is a $1 trillion category. And DeSo is a very exciting kind of enabler of blockchain to actually go and disrupt it. So, yeah.
Yeah, it's probably way bigger than $1 trillion.
Yeah,
I'd almost think it's like majority of the future economy, especially. Where is it today in terms of the product and however else is meaningful to measure progress?
Yeah, absolutely. So we basically launched the blockchain publicly in March of this year, so about 6 months ago. And what's interesting is in that short period of time, we launched a blockchain that anyone could build on. We also launched a prototype app called BitClout, BitClout, like clout, like social clout. And you can still use BitClout. It's still out there today, but there have actually been over 100 apps that started building on the DeSo blockchain since we launched it in that short 6-month period. And that's really the vision, is actually that my team focuses on making the blockchain this really awesome backbone, the back end really, that everyone can build on. And the application layer, or the actual apps and products that people use, are owned by developers, entrepreneurs who start companies and build off of that backbone. And so what's interesting is the most popular apps today are CloutFeed and DiamondApp.com. And so that's a mobile app and a web app. And both of those are bigger than BitClout, which is the app that we launched. And so they've actually surpassed that. And there are many others that are different, that like you visit them and they're doing different things. So Diamond and CloutFeed are kind of like Twitter. You go on them, you can follow people, and you can also do all kinds of stuff with money because it's a blockchain after all. But if you look at another app like Polygram.cc, it's a website, it's actually focused on NFTs, and it's focused around showing you very visually all of the pieces of content such that you can bid on them and all this kind of stuff. And so it's really enabling developers to build whatever they want on this kind of common layer, which is the DeSo blockchain.
What do you think about decentralized Twitter experience? Is that a realistic, inevitable direction we go towards, or how do you sort of see? Because on one hand, you can certainly store the data decentralized, is what you're focused on. But will there be, does there have to be, or do you think there should be, or how do you see the moderator role playing into that? Twitter has effectively a totalitarian dictatorship over their platform because they built it. But is that going to change, or how do you see that shifting?
Yeah, so obviously today you have kind of three companies, Facebook, Twitter, and TikTok, that kind of control a huge portion of what we see online. And I don't know that decentralized social is necessarily inevitable, but I like to say it's asymmetric, in that it's fortune is in favor of decentralized platforms. And the reason is actually quite interesting, which is that Twitter and all of the other incumbent social networks are based on ads, an ads-driven business model where they keep a monopoly on content and they show you ads in order to monetize that content. And what's interesting about that is it kind of forces all of the innovation to happen within those companies. So, an example, if Twitter had another kind of front end, someone built, like an entrepreneur, let's say in India, built a front end that's local to India that is off of the Twitter fire hose, that's actually, Twitter can't tolerate that in the long term because they would lose advertising revenue to that other front end. And so what happens is you see this consolidation of the effort into kind of a top-down, centrally planned situation in each of the companies. And so what you have when you have all of the content on a blockchain, when you have all the posts and profiles and follows and all that stuff on the blockchain, is that anyone in the world can build on it, and every app that actually gets traction makes all of the other apps on the network stronger. And so, just to give you an example, when you make a post on diamondapp.com, that actually shows up in bitclout.com and Cloutfeed. And when I talk to entrepreneurs who are thinking, oh, should I build on DeSo or should I build on, like this other blockchain, that other blockchain? The biggest selling point is that you can bootstrap a like big pool of content. And when you have your own feed or anything like that, and someone makes a post, it shows up in all of the other apps. You can refer people back. So Cloutfeed actually got big by putting a posted on Cloutfeed thing in their posts. And so because it shows up everywhere, it kind of sends people back. And what's really interesting is if any one of these apps does really well in attracting users and kind of blows up, that actually strengthens the entire ecosystem in a kind of snowball network effect, kind of way. And so that's why I say it's asymmetric that decentralized social is going to win, because if you have any app that takes off, suddenly everyone has to build on that blockchain that app, that social blockchain that app took off on. Whereas if you look at traditional social media, because everything is closed and it's very zero sum, if a competitor to Facebook like Instagram launches, that's going to kill Facebook unless they actually go out and buy it. And so traditional social media is kind of fragile to competition, kind of stealing their users away. Whereas in decentralized model, everyone actually gets stronger in a very positive sum way. And so I like to say it's anti-fragile, or it's asymmetric that decentralized social is going to win for that reason.
On one hand, I completely understand you, and on one hand, I don't at all. On the portion where, so if I'm on BitClout, that application that I'm using built on the DeSo foundation or the DeSo protocol, blockchain. I'm not seeing other applications there, right? Or am I somehow being advertised or shown? How does it strengthen other apps?
Yeah. So for example, right, when you, let's say you use Coinbase, right? And you withdraw your Bitcoin from Coinbase, you send it to another exchange, that is all happening on the Bitcoin blockchain, right? And so all the other exchanges kind of know, okay, he moved it from Coinbase to here, from there to there. So it's this common pool that everybody can see and build on. And that's how Bitcoin kind of got integrated into all these exchanges that interoperate with each other. DeSo is extending that to content and posts. So when you post on bitclout.com, that's going onto the DeSo blockchain, and all the other apps can see that post and serve it in their feeds. So for example, diamondapp.com can see that post and surface it. And so for example, Cloutfeed is just a mobile app that kind of has it's a Twitter-like mobile app built on the DeSo blockchain. They actually, when you post on Cloutfeed, again, it shows up in BitClout and Diamond, and they put a little referral back to their app, which was really smart and caused them to grow a lot.
Interesting. I almost think of it by analogy as if you're going into a hotel, you can go into each different room of the hotel and say there's something going on in that room. You can walk in and you have your same identity, and you walk out and you go to another room. You're in the blockchain, the hotel being the blockchain, and you're carrying your same identity, your address. And you're moving around and you're sort of experiencing different social networks or rooms for the time being, but you can kind of move in and out of them. And collectively, the more people in the hotel, the more fun it is, the more the more of a party it is.
And that's a really great analogy where it's like you're saying, when you move between different rooms, different apps that are built on DeSo, you're taking your whole identity and all the posts you've made and all the follows and all that stuff with you, instead of having to recreate it every time. Every time you move to a different app, it's all just there. And you can choose to use as much of it or as little of it as you want. But it's just a huge decrease in the barrier to entry to creating a social app, and also for you to enjoy an app that's built by someone who's not one of the big three tech companies in social right now. So.
Yeah, that's really compelling. It's also nice to not have to create a new profile every time. Yeah. So do you think is DeSo, and this may be an obvious question, but DeSo has competitors in other blockchains? Is that the right way to think of it? Or is that how you sort of think of it?
Well, what's surprising is actually DeSo is really the only blockchain on the market today that can actually store and index posts, profiles, follows, likes, these things that generate data, like I mentioned. And all the other blockchains on the market are going after kind of the financial transaction use case, that DeFi, decentralized finance use case. And there's not a single one that's really built from the ground up for this. We've been working over 2 years on it, and it's kind of the only game in town. Again, knock on wood, which is surprising. But yeah, I mean, I would say in terms of competitors, it's really, the centralized social networks. But even then, there's an interesting story about how maybe they could integrate DeSo and actually, make money off of that integration, which is very interesting. So
do you think there is a smooth transition from centralized Twitter? Like if Jack Dorsey's sitting there, and I know he has obviously thinking about this, he's very bullish on Bitcoin specifically. Do they have a relatively clear product path from where they are now, centralized servers, probably on AWS or their own servers, and then moving towards decentralized backend? Or what is decentralization look like for Twitter? I mean, can they do that, or is that just, yeah?
It's a great question. And I think the transition is probably not going to be super smooth because when you're an ads-driven business model, you're all about monopolizing content, not letting anyone build on it, and making money via ads. Whereas when you're building on an open platform, you need a new business model that's instead based on gathering fees from monetary transactions that people are doing. And so something that we actually didn't talk about is, why would someone want to, build on a decentralized social network? Why would someone want to use a decentralized social network, right? Because after all, you can have the best technology in the world, but if you don't have a 10x, probably a 100x product like these days, you're not going to get any users to come over. And so what's really interesting is, when we were starting this early 2019, we kind of looked at the market and not only felt there's a hole in terms of what blockchains are capable of and what blockchains are being built to do in that storage and indexing of posts, but we also felt like there was a hole on the product side, and a need for products that actually merge money and investment with social media in a more integrated way. And so the first thing that I did once we kind of recognized, okay, we can definitely build 100x better blockchain for this use case, I went and studied every single attempt that had been tried to mix money and speculation with social media. So I studied Steam, Cent, Boohoo, there were Roll and Rally around back then and so many others, and really felt like if you have a business model that instead of being based on showing ads to your users, instead it's based on creators, selling things or earning tips, or having a coin associated with their profile, which is another thing that DeSo lets you do, that can actually not only make orders of magnitude more money for creators than what was possible before in that ads-driven business model, but it can actually create a tighter relationship with their fans than what's been possible, because basically when you have money involved, you can put a weight on how much you like things. People can support you much more aggressively, and you unlock so much activity that hasn't been possible before. And so DeSo, that transition from traditional social media based on ads, again, I think it's very asymmetric, because the business model that all the content is open and anyone can build on it, not only has every developer in the world able to build on it, but also has these new kind of business models based on money and based on investment that weren't possible before with the traditional payment system because it was basically too kludgy and it wouldn't work for these kinds of use cases.
That's super interesting. So right now there's a big gap, right? If you have 1 million Twitter followers, it doesn't mean you're making any money. You probably don't have an easy way to monetize that. And there's companies that'll pay you to tweet things on Twitter in particular. I think it's more established on Instagram, where you have a little sponsored by a Red Bull or something. But it's not directly monetizable, which I don't know if that's a good thing or a bad thing, but it feels like the inevitable way that it started. So you'd be able to directly contribute to people who have, is there a direct income as soon as you had a 1 million followers on decentralized social media, say Twitter, or the equivalent of how would that mechanically work? Would the people who are following you have to pay a subscription, or you'd use it on the site? I'm kind of
it's a great question. So just to be very concrete, you can do basically anything with money on DeSo, right? So it's not limited to anything. But the use cases that really have come up and been really interesting, the easiest one to understand is actually what we call diamonds. So diamondapp.com, which I've mentioned, has a like button, which doesn't give you anything. It's just a like, just like a normal on Twitter or whatever. But to the right of the like button, it has a diamond, where you can actually, if you just press it, it gives a penny. But if you hover over it, it actually gives anywhere between a penny and $1,000. And what's funny is for every 3 likes you get about 10 cents in diamonds on average. That's just people giving. And it's because it's just so easy to give. It's just, hey, whatever, I hit this button. And if someone gives you $10, that actually averages out to a lot of money, even for someone like you or me. And so everybody, even my friends who aren't well known or whatever, they join a DeSo app like Diamond, and they come to me and they're like, dude, someone gave me $1. What's going on? And so and by the way, diamonds are actually, that's the least kind of money-makery thing. The next biggest is NFTs, where you can take any post and actually turn it into an NFT, an image and text, and then it's an auction and people can do series. Or a lot of people just come on and they sell their first post as an NFT. They make thousands of dollars if they're well known. And then, of course, there's yet another, the biggest feature that makes people the most amount of money is having a coin associated with your profile that anyone can invest in. And these are just some of the things that have kind of cropped up, right? Again, you can do anything with money, which is such a big canvas, but those alone have made creators, the coins especially, hundreds of thousands of dollars. There are a few creators who have made over $1 million off of those.
What's the leading platform now that utilizes this technique of having coins be associated with people?
I really like diamondapp.com. There's also DeSoPulse.com, where it's just purely focused on the trading of the coins. And so, I think they used to be called BitClout Pulse because we didn't name the blockchain the right thing before. But so I think those two platforms are great for trading of the coins. And then if you're interested in NFTs, there's polygram.cc and nfts.zone. It's like nftz.zone. And they have different features. They're kind of different, but that's the beauty of it, is this diversity in how you use social. But again, it's portable. You bring that identity, all the stuff that you have there with you in each app. It's all just there. So
yeah. What do you think about that idea of having a coin tied to you as a person? It feels a little Black Mirror-esque. I'm trying to think of what the negative downstream repercussions of that are. In some way, I guess you're more incentivized to just boost your token so overtly. Or maybe it's so quantitative in how we measure each other. I don't know. It is nice on one hand because you can so easily monetize your content, but whatever we do, there's always some price to pay.
Well, it's completely optional. I mean, so you can have a profile on DeSo through any of these apps and not have your coin, turned on or whatever. Totally optional. But what's really interesting about it is there's a lot more positivity to it than you'd think. So, for example, the number of people who I've had come to me and tell me they met through a coin investment is really big. So basically what happens is, if you like something on Twitter, you kind of like it, you're like, okay, cool, looks good, whatever. That's it. And it doesn't really go anywhere. But if you see something that you really, really like on an app like Diamond, you can invest in that person. And it's kind of like putting a weight on how much you like it and how much you believe in them. And so what happens is people will invest in someone and that'll just be so novel, like it'll be like, wow. And then that person messages you and you have a friendship that kind of comes out of the fact that you had a way to express how much you like them that's deeper than a single like. And then another interesting thing that happens when you have this ability is when people become invested in you, they actually support you on a much bigger level than you would expect. And so most DeSo apps, like Diamond Clout Feed, all of these others, are really positive. And they're surprisingly positive, especially given that early on, you kind of expect to attract people who are really divisive or kicked off of other networks or something like that. But it's kind of the opposite where, again, I think because you have that ability to invest in and support each other, the bias is to being nice and to helping people grow because you're aligning in a way that hasn't been possible before. And of course, most important, like not even most importantly, but just really important is a creator can take a fee of every person who buys their coin and make a lot of money, and so a lot of creators, I think 24 or more, have made over $100,000 and a couple have made over $1 million on just that. So optional, but I really think it's got a lot of positivity to it that goes underappreciated.
Totally. If you think about all the time that people spend on social media and they're getting value from that in some way or another, they're getting entertainment or inspiration, whatever they're getting out of it, engagement, they are not paying for it deliberately. They're not paying the content producers. You're generating content on Twitter and you're not receiving anything. YouTube is different. You get a portion of it, but it is not directly to the contributor, the creator of the content. So it seems like that's the path of least resistance, to pay people directly in many ways. Yeah.
Well, the other interesting thing is, and maybe this also might be an underappreciated thing, which is that, yes, the creator isn't getting very much on that traditional ads-driven business model, but the person who's following them is missing out as well. And again, going back to having a coin associated with your profile, what that enables is, let's say you discover someone who's small, who hasn't really made it yet, but you see them and you see their potential. You're like, this person could really be something one day. Well, by investing in them via that coin associated with their profile, suddenly, if they become really popular one day, if they grow and become this superstar, you're along for the ride with them in a way that just hasn't been possible before, right? Like, imagine if you met Ed Sheeran when he was sleeping on someone's couch and like performing at the local bar, and he had a profile on the DeSo app and had a coin. You could go invest in Ed Sheeran, so he would get money from that. He'd get a fee, and that would help support him and get him to where he wants to be faster. But then when he becomes really famous and really successful, you've also made money in providing that early support. And so that's just all the stuff that can happen. And again, it's not just the creator making money, but it's like I, as the user, the follower, can make money too.
That's super interesting. I was actually just talking about this yesterday with my brother. My brother started a company called Cameo, which is like a way you can pay people to give shout outs for influencers and celebrities on social media. And I was asking him about what is Cameo going to do for their blockchain? And we were just kind of spitballing ideas. And I was thinking about the idea of how creators are more, how can they be compensated more so using blockchain? And this feels like a pathway for people to do that. I think there's so much value created by individual content creators, and there's so much money invested in companies. But as far as I know, there's not a lot of people focusing on investing in people directly as a company would. I think it's kind of complicated with how you would typically do it. In a company, you issue shares. An investor owns a percentage of the company's shares. As the company grows, the investor makes more money. But with an individual content creator, like, Nader is a super funny guy. He goes on YouTube and makes a bunch of great videos. He makes money and he turns into like a really big name on YouTube. How could somebody have contributed to you early on? They could just give you money, put it in the bank, and have a written agreement that you give them X percentage, but it's still pretty offline and clunky and unorthodox. So it makes a lot of sense how this paves a pathway for people to invest in individual content creators and see the upside down the road, which is a really unique liquidation, like unique way to invest money.
Yeah, and you're kind of hinting at an even deeper part of it, which is that I think that today, what can you invest in as an ordinary person? You can go to these companies, on an app like Robinhood, and companies aren't really relatable. Most people don't feel like they really understand them, but everybody understands people, for the most part, and so it's kind of a really relatable asset class that is fun for the person who's investing, but then additionally can actually help the creator a lot. And then just to touch on a different side of it, which we haven't really hit yet, which is there's kind of two reasons why you would buy someone's coin. The first is purely speculative, supply and demand. If there's more demand, it pushes up the price, and so you can make money on when someone becomes famous or becomes more popular. But there's also a cash flow story that also goes underappreciated, which is that in the future, when there are ways to monetize, even more ways to monetize on the DeSo blockchain, a percentage of that can actually be taken and given to the coin holders as a cash flow or as a dividend. And so this is actually already the case today for the NFTs feature. So if you sell an NFT on any DeSo app like Diamond or Cloutfeed, you can actually set a royalty that's called a coin holder royalty. And so it'll send a percentage to your coin holders every time that NFT resells. And so you can imagine if Picasso had done this, and if he had a coin on DeSo, you'd be making, when that painting sells for $1 million, if he had like a 10% royalty, that'd be $100K going to his coin. And again, that's really awesome because fundamental investors can value that and actually say, hey, early on when Picasso's young, when he's getting started, if someone sees that potential, he can actually pull forward all of those royalties, and someone will buy his coin at a premium and fund him to get him to where he wants to be much faster than if it took literally until after he's passed away to be recognized. Right. So that's just kind of the cash flow story, really, I think, makes everything more efficient. And really what it's kind of like is, unbundling something like Facebook, that company into, each creator's coin and the owners of those coins, which are typically the fans of that creator.
Do you think that one of the things you said reminded me of this, but do you think that the limiting agent or the thing that would accelerate more creative people making more things is money? Like if you did give Picasso, say, more money early on, would he get to be as big as he was earlier? Translate that for maybe a YouTube content creator, but it feels so inexpensive to create content. I'm probably missing and overlooking a lot of what goes into it, but I wonder about that. Are people, if you did give somebody more money earlier, they would create more content? Because in a company, it's more clear to me how if a company had an extra $1 million early on, they could hire more people, they could buy more ads. It's more clear, but I assume the same thing goes for content creators.
Well, what's interesting is I have had the good fortune through, creating DeSo and BitClout to meet a lot of people who really are creators. And what's really interesting is if you talk to them, the vast majority started as a side hustle, and, for them, their constant question was, okay, how do I get enough money so that I can do this full time and not have to do my job? How do I make this low risk enough that I can get out of this part of my life where I'm selling my time for something I don't want to do so that I can focus on my passion and convert that money into my passion, right? So I think for most creators, when they're getting started, it's really important to get them from the stage where it's a side hobby that they're struggling to support into, okay, this is my full-time thing right now. And even just a few months of their rent, can get them to that a lot faster and get them motivated to do it full time.
Yeah, that's a huge part of it. Probably rent is the drag. If we didn't have rent, then people could...
I know.
Freaking rent. I want to ask you, so you raised some money with a fund to invest in more projects. How did you structure... There's a DeSo coin. How did you structure that? Was it... Talk to me about how you decided, or what were the key decisions that you had to make when creating a token and raising a fund?
Totally. It's a great question. So if you go to DeSo.org, there's a little circle pie chart that kind of shows how many DeSo coins are out there. And so basically, whenever you use an app that's built on the DeSo blockchain, you're using DeSo coins to do stuff. So when you invest in a creator, that's using DeSo coins. When you give a diamond, all of it under the hood is DeSo coins. It's getting more and more abstracted away. So there are people who are working on apps where it's like double tap with Apple Pay and now you own someone's coin and you never even saw that DeSo was involved. But for now, it's kind of like this lubricant or oil on the, that allows you to actually do it's like credits on the system. And so DeSo, it's a cryptocurrency like Bitcoin. There's 10.8 million in circulation. It's listed now on blockchain.com and Ascendex with other big listings coming very soon. But to answer your question on kind of, how we have money to build the blockchain and all of that, well, if you look on DeSo.org at that chart, it shows there's 2 million DeSo that's allocated to the founding team, and then 8.5 million that was sold via an initial distribution to big investors, but also ordinary people. So anyone, for maybe like 6 months since we launched the blockchain could actually go and convert Bitcoin into DeSo through this decentralized mechanism. And what's cool about that is there were over 44,000 purchases, so it's a fairly widely distributed thing, and no one entity got to purchase more than 5%. And so there are a bunch of big funds involved in that. There was over 5,000 Bitcoin that we got to work on this project, which is obviously a lot of money. It's like $200 million or something. And we did have really legit investors involved. So like Sequoia, Andreessen Horowitz, Social Capital, TQ Ventures, Coinbase Ventures as well. And so we're lucky to have that, but it's actually fairly distributed in that ordinary people own, like most of it, the majority of it. And so, yeah.
So even those early investors, they bought DeSo just like everyone else did, and they were limited to the 5%?
Exactly. And actually for the first maybe, until maybe a month ago, there was no corporate entity associated with the blockchain. It was actually, again, if you put Bitcoin into this treasury wallet and this decentralized, the blockchain, literally, the DeSo blockchain would print you DeSo through this decentralized mechanism. And a month ago, we set up the DeSo Foundation as a corporate entity that can use that $200 million to start funding projects building on DeSo and to support the developers and all of that. But yeah, everyone just owns DeSo the coin, and so everyone's aligned. Everyone from the big investors like Sequoia to ordinary people.
Totally. How is new coins printed, or what's the mechanism for growing the circulation?
Well, so there's 10.8 million max, so there'll never be more than that. It's about half the supply of Bitcoin.
So there's no more coming out.
Nope. There's very little. It's 10.5 million now, and there's about 300,000 that goes to mining to protect and secure the network. But yeah, in total, it's not going to be more than 10.8 million. And when we move to proof of stake, it might actually, which we're aiming to do by the end of this year, it might actually be less than 10.8 million. It'd be like 10.7 million or something. But yeah. Mm-hmm.
What did you do in the beginning to launch? I mean, in hindsight, do you look back and give yourself an A+ on the launch of the token, or were there things that you made a mistake on that you're like, hey, we should have, I don't know, built a community? I don't know a lot about launching tokens, but I'm curious to hear what your experience was.
Yeah, we definitely made some mistakes. I made a lot of mistakes, but it's worked out very well in spite of that, which is good. But yeah, I think probably what's funny is I've been working on the technology here, like technology and product, but really the blockchain I think is this enabler, the DeSo blockchain. And when we launched in March, we launched a prototype app called BitClout built on this blockchain, and we called the blockchain the BitClout blockchain, and we were just like, cool, everyone's going to get it. It's just the first app, and the blockchain, are called BitClout. But actually calling it that confused people and made people not really understand that when they're using BitClout, it's just a prototype. It's not, it's not the thing that is going to end up being what everybody uses. That's actually going to be built by external developers. And most people didn't even understand that there's a blockchain. So this technology that I've been working on since early 2019 was like, no one even knew that it's like, wait, it's this blockchain that literally can do things that no one else can do. It can scale us to this new social category worth trillions. So we did a thing where we renamed the blockchain. We said it's officially called the DeSo blockchain. And we had to do that, again, because the way we launched, we didn't really separate our prototype app from the blockchain itself. And that was really helpful. I wish we'd done that earlier. I think, me being anonymous is another thing that was controversial, because I started out operating under a pseudonym named Diamond Hands. And that was what
great name.
Yeah, it's good and it's true. I don't sell anything ever. But it's pretty much, yeah. But what happened was, I was pseudonymous, and we launched all of this kind of without saying who's behind it, and there wasn't a corporate entity or anything. And people got confused, and the press kind of started saying, like, wait, who's behind this? This looks sketchy, and things like that. I think it helped decentralization, where a lot of developers, I think, felt empowered by the fact that this really is, like, the ones who did understand that there's a blockchain here they can build on, which was a lot. We have over 100 apps being built. I think it helped that I was pseudonymous, because it's like, this is really something that's going to be decentralized, not monopolized. And so I think it helped from that standpoint, but created a lot of confusion. And so also about a month ago, I went out and put my identity, fully behind it. I doxed myself, as they say. And yeah, and I don't know if I would go back and do it differently, but that's just something that I think got the project, maybe it made it controversial or something.
Interesting decision, because I can see clearly like the skepticism from people who don't really understand the technical part of it, and they're like, well, this guy is we can't trust him, we know who he is, or girl, or who knows who it is. The upside to being pseudonymous is that people who are contributors to the blockchain and to the early development, they feel that you're not going to be taken out, that there's not a risk of if the top guy goes out, then, the project is going to fail. Is that, generally speaking, the kind of the same idea behind the Bitcoin Satoshi? He's like, well, I'm going to become pseudonymous here because no one's going to come and get me. No one's going to, not as if that actually does take down the blockchain, but it maybe tarnishes the brand and hurts the price and the adoption, that kind of thing.
I think it's a short-term, long-term kind of trade-off, right? I think anything that starts pseudonymous has to deal with, this is sketchy, this is a scam. I mean, look how long it took Bitcoin to escape that, right? And if you look at the top two blockchains today, Bitcoin is full pseudonymous. Ethereum is like, Vitalik is the god of Ethereum. And both work, right? They both work. But Bitcoin took forever to build that trust. Whereas I think Ethereum was able to bootstrap a lot more quickly by having Vitalik there. So it's a trade-off. I personally, I really feel like the best thing for decentralization is not to have a figurehead, like you're saying, because people can really, it really shows how it's owned by everybody else, which is the important thing. But I think after Bitcoin, there's so much noise in crypto, so many scams, so many things that are happening that I think to really stand out from that noise, you kind of have to build a lot more trust than you might have before Bitcoin came out and before all of this noise kind of started happening. And so I think it's the right decision for us. And I think the trade-offs are worth it,
Yeah, yeah. No, it makes sense. When you started the foundation, is that obvious too? I assume that came out of your pool, like you and the other founders said, hey, we're going to take some of our coin, throw it in a foundation to invest in future developers. Talk to me more. Is that right?
Yeah, it officially today it spends the Bitcoin that was raised. So there's actually 5,000 Bitcoin in addition to the 2 million that's allocated to founders. But we actually may put some of the founder coins, into the foundation as well, just to help it out, because we have so many coins, and if we put it in the foundation, that can actually increase the value of what we have. So that's on the table, just hasn't been announced. But aside from that, the foundation actually was pretty obvious to me at some point. But we didn't want to create a corporate structure around it until the blockchain was decentralized enough. Really, there's kind of two pieces to that. So if you have a corporate entity on it from day one, suddenly everyone's asking, hey, wait a minute, when is this thing going to deplatform me? When are the shareholders going to take control and cut everyone else out? Like happens with so many other social networks, right? And so to me, it's really important that we had that period where there wasn't a shareholder or anything. And we still have that now because the foundation's a nonprofit, right? So I think that from that standpoint, it's important. And then from a regulatory standpoint, the fact that this blockchain really is fully decentralized, it's literally running on thousands of nodes all across the world right now. And the fact that there wasn't a corporate entity that created the blockchain, or that could be the issuer of a security or something like that, the lawyers thought that was also strong from a regulatory standpoint. But to be clear, I think the biggest value comes from that trust in the decentralization, and that you're able to build a better community when it's not like a corporate thing.
Yeah. How do you decide where to put that cash or those tokens, the Bitcoin, I guess? Do you have and this may be public, but do you have a mission statement to say we want to invest 10% per year, or is it completely subjective based on smart people or projects that you meet, or how do you think about investing that?
Yeah, so we're super transparent about this, which is that it's currently too centralized. So the foundation has one board member, which is me. But what we're going to do is we're going to find other board members who can govern it from crypto, hopefully like heavy hitters in crypto. We're talking to a few who we can put on it so that the foundation is actually a relatively decentralized, kind of actually well-governed body. To allocate that Bitcoin and use it for growing the DeSo blockchain, but also growing decentralized social in general, hopefully, regardless of whether it's the DeSo blockchain or some other blockchain. And so the other thing about it is we've already actually announced that $50 million of the roughly $250 million in Bitcoin is allocated strictly to funding developers via we have this fund we call the Octane Fund. So there's $50 million, and those checks are going to get written in the next probably few weeks, actually, which is very exciting. So that's part of it. But going forward, it's really a governing body of that entity that's going to do it.
Interesting. Can you do it on chain, or it always has to come to people, right? So it doesn't really matter if it's ultimately,
I think that doing it with a foundation that's not for profit, where you pick really good people to be on the board, I think that's a good model. I think at the end of the day, hard decisions have to be made. You can put things in that process, like for example, a proposal can be submitted on chain and then decided by like votes of token holders or whatever, and you can always have that foundation hand off to a process like that in the future. But early on, it's good to kind of have the people power there to be making those weird gray area decisions before you go full DAO or decentralized autonomous organization. So
it's kind of interesting if you think about it, because this is a very common practice to take a percentage of the money raised or the tokens in circulation and then create a nonprofit foundation, invest in people building on the chain, on the protocol or the blockchain. It's very similar to, I'm thinking like Stripe or Google Ventures or Slack, where they have a fund and they raise the fund to invest in apps on their platform. So like you want to build a Slack app. Well, there's a Slack fund of people who manage that fund that will say, hey, you're a smart girl or guy. Let's invest in you. And they're doing it kind of for two purposes. Mainly is to grow the number of apps in the network, because the more you have, obviously, the more valuable the network is, or the platform like Slack. But then they have the return on the investment, which is probably the difference between, if you're a completely nonprofit, you're just giving, you're not getting anything in return when you invest the money. It's just purely a grant or donation.
So we're looking at the different models. We actually have, and we're actually going to write a blog post about this. We actually think funding companies with equity in such a way that they can convert into a DAO, like going after that, is actually a pretty interesting model. We're actually working on a very interesting kind of like 2-page kind of document, kind of like, how there was this Y Combinator safe document that a lot of people in venture use to raise money. We actually think there's an opportunity to create a kind of upgraded version that puts in kind of, if you want to convert it into a DAO, here's how it works. Here's how the coins distribute to equity holders in the event that you do this. And so just to add some extra stuff that makes it so easy to just sign a safe, get that person funded with traditional structures that we understand, but leave a really clean option open to go to that fully decentralized kind of DAO where it's governed by the coins in the future. And I'm actually really excited to write something up about that once we get our research done. And hopefully everyone in the ecosystem in crypto can benefit from it, not just apps building on DeSo, because it's just such a common need. So
yeah, dude, that's a great idea.
Yeah, we're
Seriously.
really excited about
Yeah.
it. Yeah, and we're kind of at the forefront because we have these, like, over 100 projects have applied to be funded by the Octane Fund, and we have all the money, and I've spent over 10 million on lawyers in my last company, trying to navigate, like, how do you do this compliant with securities law, money transmitter law, and banking law, and FTC, CFTC, all that stuff. So it's kind of a great opportunity for me to kind of take that practical lens that I've put on all of that and make it into something that can be used by the whole ecosystem. So
yeah,
I'm excited. I
such a
think
good
it's going to be
idea.
good. Hopefully helps the world too. That's the point, really.
Yeah. No, and it seems like such a common use case. I just had on the guys from the Near Foundation, the creators of the Near protocol and foundation. They were talking about the same thing. They have a bunch of money. They're investing in companies or apps on their protocol. And it's like they're just giving the money away to the developers, which is great, but also it doesn't feel like the end state of how the foundations should run, because you don't have any way of engaging formally with people. Grants are great for kind of stimulating people to jump in and work on something, but they're not, what's the word? They're not completely two-way. They're not, the incentives are not fully aligned. It's like you could just take it and then you kind of do a half-assed job on the project and then you just leave. So yeah, obviously a huge part of it is screening the projects that are built on there, but having that in, like legal document in place as a standard. It's amazing how these documents have a huge impact. Like the convertible note, just the ability to raise, it sounds so simple in hindsight, or the safe, but if you have to do an equity round and you're, raising $200,000 and two people on a project and you're spending $30,000-$40,000, and it's just not, it's a non-starter for so many people. So little things like this do go a huge way.
Absolutely. Yeah. And it came from, we have founders all over the world too. So someone in London or in Syria talked to, two different founders in each of those countries. They're like, I don't really know what I'm doing. I don't know how to do this. And that's the blocker to them following their dream, that they just don't know and they don't have that playbook. So hopefully when you lower that barrier to entry, you can get really more awesome entrepreneurs entering the game who otherwise were kind of scared just because they didn't have the knowledge.
Yeah. Would you point people to any particular areas or resources that are crypto familiar and want to get deeper into building? Maybe they have, say they have no idea, but if they have some idea that they want to build, or anything particular?
Yeah, it depends. I mean, so if you want to build social apps that are enabled by crypto and where you want to do all this fun stuff with money, DeSo.org is a great place to start. It tells you all about the DeSo blockchain. And if you click Start Building, it's kind of a tiered kind of in terms of complexity. So there's Get Started, Run a Node, and then there's like this third one that's like Go Deep. And it actually only takes like an hour to get through that document, but you'll understand the whole DeSo code base when you do that. And a couple people we've hired came from that document. They found it and just got obsessed with it once they read it. And so that's a good way if you're thinking about building on social. But for other blockchains, I mean, it's all about YouTube and Googling, right? So
yeah,
yeah,
totally. Awesome, man. Are you active on Twitter or BitCloud or Diamond? What's your go-to?
Yeah, Diamond App is my favorite right now, diamondapp.com, and I'm Nader, so you'll find me. I do have a coin. It's turned on. You can invest in it. I get 10% of your investment.
Sweet.
And it's great. I'm hoping to have benefits to my coin holders at some point, but there's nothing right now. But yes, I'm on Diamond. I also do have Twitter though, so I'm Nader Theory at Twitter, and of course you need to follow DeSo Protocol on Twitter, and just DeSo on Diamond App. So all good.
It's a good name, DeSo. I feel like it kind of rides off the coattails of DeFi a little bit, where it's a 4-letter D name. It's got decentralized right in it. Decentralized social. Yeah, obviously that's where
we love it. It's our mission and a cool name at the same time,
Yeah. And you got the domain, DeSo.org. That's such a great
Yeah.
Do you have DeSo.com?
I do have it. I do.
Wow.
The foundation, has it. But the funny thing is that we felt like org was better. So even though we own the .com and we paid a pretty penny for it, it's like,
we did the same thing. Yeah, I know. We had the same thing. We were talking pre-show, but the company I ran prior to being crypto was Home Hero, and we had homehero.com and .org, and it was a marketplace for people to find caregivers for seniors. And we're for profit. We'd raise money, but we had the .org in the beginning, and we got .com. We're like, .org just has a better ring to it. It's on some level a branding thing, but it works.
Yeah. I just feel like, we want to help the world, and just jives better, with me personally.
Yeah.
And it's fun, man.
Cool, man. Well, congrats on all the progress. It's a super exciting project that I'm personally really inspired by and excited for. So wish you guys all the best and amazing things to come.
Yeah. Thanks so much for having me, man. I'm really excited. And it's early days, just the beginning. So
yeah.
I really can't wait for what's coming.
So you guys would be looking for engineers or contributors to the developer ecosystem, right?
Absolutely. And what's really fun is if you go to github.com/DeSo-protocol, you can see all the code. You'll get there if you go to DeSo.org and you do that Go Deep. But our two most recent hires actually were people who were just contributing to the open source platform, to that code base. Again, because 100% of the code is public. Even Diamond App has its code public, which is not created by us, it's created by another, third-party developer. But and so you can contribute there. But if you want to just apply, there's a jobs link on DeSo.org. It actually says "Save the Internet," which is fun. So we're looking for engineers and also non-technical. So we're actually looking for a COO, and but that's how we're scaling up.
Awesome, brother. All right. Well, keep doing your thing. Keep crushing it.
Thanks so much, man. Really great to be here.
Bye.